Good morning, natural gas. It's Tuesday, January the 6th. I'm Tim Beggins, president of Elk Trading Company. And today, the February natural gas contract is down about 14.2 cents here. Currently trading at 338.10. A little bit down 4%, excuse me. We are well below the 13 and 48 period exponential moving averages. Yesterday's price action, it created a bullish hammer candlestick, but we've got no follow through. We've made new lows today. What does that mean? It means that possibly we're forming a complex bottom. So be careful. We've got storage tomorrow. Expectations from Natural Gas Intelligence, minus 107. That compares to minus 92 for the 5-year average. But last year was minus 205 as cold Arctic air moved in. We had 7 weeks of very strong storage withdrawals. But here in Texas, in Houston area, it's 80 degrees today for the high. So it is just too warm for January. So again, we are currently trading at 337.90. We're down in just a little bit more, down 14.4 cents. The RSI is still in the sell mode, but we are starting to get very close to oversold conditions at this point. So let's take a look at the hourly chart and use the pivots here because they'll be able to give us some support and resistance. We're well below the daily pivot, which came in at 346.90. Currently now we're below the first support, which came in at 340 and 9 ticks. And now we're looking at next support, 329.40, well below that 323.40. Right now the RSI is trying to turn higher. So we may see some short covering here ahead of tomorrow's storage withdrawal. And let's see if we get a bullish surprise. But those weather forecast models are still just too warm. So let's take a look at the front to back spreads. And these are the Jan versus, this is the OC versus the April spread. And this is currently trading right now at 65.5 cents, down just one tick or 0.15%. This spread is in overbought condition at the moment. We've got a small gap to fill right back down here to the high of 63 cents. So we'll see if we can close that gap and then possibly move out. Our high last year, about 81 cents on this particular spread. That's the OC versus January spread. And here's the other injection spread, the Jan versus April spread. And so let's take a look at that. We're currently down just 1.3 cents or 0.79%. We're currently trading at 163.80. Again, our high last year was 168.80. I thought it was 1705, but it looks like it's 168.80 from last year. And again, overbought condition at the moment. We've got a big gap right back down until about 160, about 160, 159.70. So let's take a look. We've got some choppy action ahead. What's going on with the weather forecast models? Well, we've got no cold weather until maybe the 17th here. And as you can see, this is the wind chill map here, all the way back into January 17th. And as you can see, the pattern change seems to be changing a little bit. We've got more of a V pattern here, and then we'll see if that is, potentially signaling that we're transitioning from La Nina over to ENSO neutral conditions, which are more variable. But we need to get that cold down into Texas, down into the south. And so far this winter, we really haven't gotten much. Let's see what snow and the ice are doing. Well, Hudson Bay is completely covered with ice. That means that cold Arctic air can skate right across it and head toward the Great Lakes and the Mid-Atlantic and New England states. And as you can see, we've got good snow cover here, all the way from Montana, all the way down into West Virginia and across New England, including parts of New Jersey. And look, let's see what else is going on. We've got some yellow here in the Great Lakes. What's going on there? We've got some ice forming. It's January after all, and cold air has been moving across these bodies of water. And as you can see, we've got ice here. And this is Lake Michigan, this is Lake Huron. And of course, over here on the right, we've got some ice also in Lake Superior. So this is forming. It's taking its time, but it will continue to form over with ice. Let's turn to Europe, and Europe is cold. And it means the 5-year average deficit for natural gas storage will continue to widen closer toward 500 BCF by the time January rolls off, which means they're going to end the season very low in storage stocks, which means U.S. natural gas in the form of LNG has to ride to the rescue here. And let's turn to Asia. We've got some colder temperatures, but most of that cold Siberian air is locked up there in northern China, parts of the Koreas, really not impacting Tokyo too much. But Beijing is nice and cold. It's just normal for this time of year. And let's take a look at the broader picture. And as you can see, that cold Siberian air right here is locked into that eastern Siberian area, Mongolia, and of course, parts of Russia and northern China. And as you can see, parts of it is over here in Scandinavia, which is allowing that cold Arctic air, pushing further over into Europe. But let's see the United States, and it's locked into just Canada. It's just lacking the mechanism to get down into the deep US. How are we doing on storage? On stocks here. This is the oil and gas E&P sector. We've got a little technical issue there. This is the stocks between $2 and $10 billion and have a high short float over 10%. And it's a sea of red, unfortunately. Why? Because natural gas is down so much and crude oil is barely moving. It's still at $58 a barrel, well below its break-even point, about $65 to $66 a barrel. So again, recapping here, we are currently trading at 337.20, down 15.1 cents or 4.26%. Sorry for the technical difficulties there. Please hit that like and subscribe button. Thanks for listening. We'll see you soon.